Well, good morning, folks. This is Billy Trout with the Tennessee Department of Revenue's Taxpayer Education section. And on behalf of our Commissioner, David Geragano, and our staff in Taxpayer Services, we want to welcome you to today's presentation on franchise and excise tax basics. And we're going to emphasize the word basics several different times during our presentation today because franchise and excise tax is a very big tax, a very complex tax. But this is going to be designed to kind of give you an overview and some of the main things that we get a lot of questions about at the Tennessee Department of Revenue, particularly during our filing season. So with that, I'll go ahead and introduce you to our other folks that are going to be online. Katie Julian is here. You can see her on screen right now. She is going to be walking you through today's presentation. We're privileged to have Mr. Cody Elder from our tax practitioner hotline, or franchise and excise hotline, whatever we call it these days. Cody is a great one there. He knows a lot of stuff, and he'll be here to help us with technical expertise. And our assistant director in taxpayer services, Dan Vinson, is online as well. And we're going to be monitoring questions that you may have had, and bring up some of the questions that some of you gave us ahead of time as well a little bit later. I did go ahead and put in the chat a link to the PDF, and of course Katie has put a QR code here on screen that you can actually link straight over to the material. A recording of this is being done right now and will be posted online either later today or tomorrow. We do want everybody to participate, but due to the large number of participants that we have here, and more joining us even as we speak, we're going to keep chat off until later in the presentation, knowing that it would be impossible to answer every question, but we're going to do our very best to try to get to the main things today. Okay. So with that, I'll go ahead and turn things over to Katie and let you take over there, Katie. Katie, take it away.
Thank you, Billy. Thanks for joining us today, everyone. The real test here is going to be if my voice can make it through this whole hour. I'm going to be really surprised if it can, but we'll see how that goes. I'm glad you could all join us. We're excited to bring this webinar to you. We actually did a F&E Basics webinar a few years ago, but so much has changed. We felt the need to update it and kind of beef it up a little bit more too, and add more to the basics. But like Billy said, we are going to really just stick to the high-level basics here. We have a lot of other great webinars in our webinar library that break down a lot of the more technical, more niche topics within F&E. So at some point, I would refer you over to our webinar video library to check out all the different franchise excise tax webinars that we've done. And we're actually going to be updating some of those too as well over the next year. So again, one more chance here to scan this QR code if you want to follow along with this using the slides. And here's what we're going to be going over today. The excise tax and the franchise tax are imposed on corporations and most limited liability companies for the privilege of doing business in Tennessee. So the current excise tax laws can be found in Tennessee Code Annotated Title 67, Chapter 4, Sections 2001 and what follows, franchise tax laws in 67.4, 2101 and following. And today we're just going to be briefly covering topics such as registering for franchise excise, nexus for out-of-state businesses, general filing information, including filing of extensions. Franchise excise tax is a tax that you can file an extension for, unlike most other taxes here in Tennessee. Making estimated payments, whether you need to or you don't need to, and how you make those. The franchise tax, there is a minimum payment option there, how you do that. We're going to briefly touch on exemptions, the schedules, and then we're going to discuss some FAQs. Like Billy said, we are going to be keeping the chat closed right now, just going through slides, but here when I'm done with the slides in about 20 minutes or so, we'll turn the chat on to be able to get to your questions then. We have a great informational manual about franchise excise tax. If you have not checked out our manuals for all of our taxes, they're all fantastic. We're adding to those manuals and making them better and better every day. Here's a link. If you're following along with the PDF, you can click on this link to go over to the franchise and excise tax manual. Later on, we'll share a lot more resources with you, but this is the end-all, be-all, most exhaustive resource that we have for franchise and excise tax is this tax manual. So what is franchise and excise tax, or F&E tax? Franchise and excise taxes are two separate taxes, and they are computed on different tax bases. Both are reported on one form, the FAE 170. So franchise tax. You see we've got a kind of a big fork in the road here with franchise excise tax because there was a huge law change that just got passed this past session that went into effect for 1/1/2024, Public Chapter 950. Moving forward for tax years ending on or after this date, franchise tax is computed on net worth. For tax years ending on or before 12/31/2023, the franchise tax was computed on the greater of net worth or the value of property owned or used in Tennessee. So that is a huge change for franchise tax, obviously. We are not going to be getting into today all the ins and outs of that change and the elimination of the Schedule G and the refunds that public chapter created. But I do want to take you real quick before we move any further over to our website to a great resource regarding that whole topic. Okay, let's see here. Should be able to see my browser now. We have got a web page dedicated to this whole Schedule G repeal and refund. I like to get to it just by going through the slider here. Here we go, franchise tax property measure, Schedule G refunds. This whole page right here will detail everything, anything and everything about this new law, including updates. So some of you may have been with us for the webinar we had this past spring, right after the law passed. There's even been some updates to the way this is rolling out since then, such as because of the refund claim date ending on a Saturday, November 30th, we're going to be accepting claims until Monday, December 2nd, 2024, things like that. So this is a really extensive webpage that has lots of great information on it, links to the notice, filing instructions, lots of FAQs you can see here. So if you do have any questions about Schedule G, this is the place for that. Yes. Hey, Billy.
Hey, Katie, I don't mean to interrupt you. I was just going to tell you, I did put a link to this Schedule G page in the chat for everybody's
Great.
convenience on that too. But I do want to emphasize something real quick about that date, that December 2nd date. That is a hard date. That is a very hard date. Please, if you're going to submit a request for a change, relative to the Schedule G refund, it needs to be done and to us or postmarked as it says just here on the page, the way it says, by that date. Because if it's late, it will not be accepted. And we just want to make sure everybody understands it. So start sooner than later. So please do that. Okay. Thank you.
Yes, thank you, Billy. All right, so moving forward in today's presentation in this F&E basics, we're not really going to be talking a whole lot more about Schedule G because currently, as of the current period, it is no longer. Franchise tax is only computed on that net worth. Excise tax is computed based on an entity's net income or loss. All right, so registration for franchise and excise. Entities that are subject to F&E, you can see here, corporations, LLCs, limited partnerships, real estate investment trusts, business trusts. Entities that are not subject to F&E, sole proprietorships, general partnerships. We're going to talk about in the next slide some entities that are exempt from F&E, but in terms of the type of entity that you are, you're either subject to F&E or you're not. Parent companies and subsidiaries register and file separately. And I think that that's handled differently in different states. There are exceptions. That LLC that is owned 100% by a corporation is included in the parent's return, and financial institutions and captive REITs, affiliated groups, file Form FAE 170 on a combined basis. Um, uh, Franchise and excise tax, you are subject to that tax from the date of your formation. Now, that is from when you register with the Secretary of State. If you have not yet registered with the Secretary of State, then you're still liable for F&E if you are an entity that is subject to F&E, and you will be subject to F&E on the date, based on the date your operations began with Nexus in Tennessee. Got two people hopping in on here. Yes, what do you add to it, please?
Let me jump in real quick, and then Cody, I'll let you jump in too as well. I just want to point out something real basic. So we get tons of questions for people that say, I got an LLC. I set up an LLC and I did anything with it, and I didn't do I have to pay this tax? The answer is yes, you do. So when you are starting a business, and Katie and I talk about this a lot in our new business workshops and some other stuff that we do, um, it is so important to understand what you're getting into. So, if you are an LLC, if you are one of these other taxable sorts of entities, we're going to have you register. And you're going to have to be registered properly with your federal ID number, hopefully, also tagging in your Secretary of State ID number as well. The reason this is so important is because when your tax records are filed with us, we have to make sure that your returns and your payments post properly. Okay. Some of you that use tax preparers, some of you that are tax preparers already know that how critical it is to get your Tennessee account number ahead of filing that federal return. Okay, because we read data electronically from the feds, from the IRS. Okay. If we don't have you registered properly, your paperwork, so to speak, or your payments or whatever are going to have a harder time being tracked. So you can avoid the whole thing by registering and getting your account numbers ahead of time, providing those account numbers to your tax professional, or make sure you're using them when you file directly. And Cody, I'll go ahead and be quiet and let you say what you were going to say. Thank you.
Okay, yeah, thanks. And Katie, you said this. I just wanted to chime in and say that separate entity filing requirement, it is important to, realize that is, Tennessee is unique in that. A lot of other states allow you to file combined returns. So a business might be disregarded, in their home state or even with the IRS, but will have to file a separate franchise and excise return unless they meet one of those exceptions. And so, anyways, we do see that a lot where unfortunately businesses file a combined return when they shouldn't, and then we have to come back and fix it a few years later. So anyways, if we can get it right, at the beginning, that's always nice.
Absolutely, especially since this is something that's different and handled very differently in other states. Important to note there. Thank you, Cody and Billy. All right, so on to exempt entities. I'm not going to go through this whole list. We'll spend just a minute here letting you look over this list of entities that are exempt from franchise and excise. But the one thing I want to call to your attention is the second half of the list, numbers 10 through 17 here. These are exemptions that must be applied for. You can apply for them on TNTAP, or there's a paper application form for all of these. And then actually a renewal is required. You don't just apply for the exemption once and then get it from here on out. You must renew the exemption each year. A few of these, numbers 13 through 17, the ones with the, 12 through 17 with the asterisk here, may require an audit evaluation. All right. So businesses formed and operating in Tennessee will always have nexus in this state, but out-of-state businesses doing business in Tennessee with substantial nexus are subject to F&E. What does that mean? A taxpayer without a physical presence in Tennessee may have substantial nexus if they meet this bright line presence. The bright line presence standards for substantial nexus operate such that if a taxpayer has at least $50,000 of property or payroll in this state, at least 500,000 of receipts in this state, or at least 25% of its total property, payroll, or receipts in Tennessee, then it's going to have substantial nexus with Tennessee without considering any other connections to the state. So as you see here in this note, a business engaged in systematic and continuous business activity in the state that has produced receipts attributable to Tennessee customers will have substantial nexus with the state, even if they do not have that bright line presence. So very important there. Lots more about out-of-state nexus and bright line presence in our tax manual if you are an out-of-state business that are joining us here today and want some more information on that. Lots more in the manual. Okay, so filing. Without exception, every taxpayer should file and pay electronically for F&E. In the past, there were situations that required the department to accept paper returns, but however, now there are no exceptions. Everyone should file and pay electronically. We do have a section on our website called e-file and pay that has information about electronic registration and filing, electronic payments, TINTAP and FAQs. A lot of taxpayers use modernized e-file program through the IRS. Returns, extensions, and quarterly estimated payments can be made through that MEF program. We have a link here. If you've got the PDF, you can follow for MEF certified vendors. If you do not use one of the approved vendors, then you must file electronically using our TINTAP system on our website. And one thing I want to touch on real quick, I meant to touch on it when we were talking about registration, but a lot of taxpayers, you business owners that are on here, I would guess that we probably have a mixture of business owners and tax professionals or CPAs on here. If you're a business owner and you're on here, and let's say you hire a tax professional to do your federal taxes and do your and file your F&E taxes for you, that's great. I don't blame you at all. It's pretty complex, but I just want to encourage you to make sure that you do still have access to TINTAP as the master account holder for your business. There can be so many wires that get crossed. For example, let's say your CPA is filing your return for you. If there was an issue with that return, you're the one that's going to receive the notification in the mail about that. You may get that in your mailbox, hard copy mail, but having TINTAP access, you'll be able to see that correspondence in TINTAP. You'll be able to see at a glance if you're in the red or in the green, if you have a liability hanging out there. Sometimes just a misconnect. Maybe it's with a carry forward credit or a loss carry forward. Something can get off at some point down the line that can screw everything up. And if you're not staying on top of it, it can really create and snowball into a bigger problem. My whole point being, it's not something that can't be fixed, but that if you're a business owner, we really highly encourage you to have your own TINTAP access to this account. A lot of businesses will have access to their sales tax account or their business tax, but not their franchise excise because they're not filing that. Make sure you add just access to your F&E account if you're a business owner. All right, so back to this timeline that we're looking at here. So this timeline is going to assume a 12/31 fiscal year end. The franchise excise tax return is going to be due on the 15th day of the 4th month. By that date, you have to either file and pay your return, file and pay for an extension, or file and pay the $100 minimum if the business is inactive. Also, you see on this timeline the extension. If you have filed a valid extension, which we'll discuss here in a couple minutes, you get 7 months. That was a law that changed a few years ago. A lot of tax preparers. I think we're really happy about that. Used to be a 6-month extension, but now it's a 7-month extension. So for a 12/31 fiscal year in entity, that puts the extension deadline at November 15th. We also have quarterly estimated payments that may be due if you have a certain amount of tax liability in the past. We'll discuss that in a minute. They're not quite on the quarter, so it bothers me to call it quarterly, but let's say 4 estimated payments. The first estimated payment is going to be due on April 15th. Again, this whole timeline assumes a 12/31 fiscal year end. The second payment just 2 months later on June 15th. Then we've got a third estimated payment due on September 15th, and that fourth and final estimated payment due the next January 15th. All right, so about filing extensions here. That 7-month extension will be granted if payments by the due date, now that is by the original, by your tax due date. So for 12/31 fiscal year end businesses, that's April 15th. The lesser of the following is met: either 90% of the current period's liability, 100% of the previous period's liability, and that can be annualized to 365.25 days if the previous period was a short period, or $100 if the previous period does not exist, so for a brand new business. Once the financial requirement for the extension is paid, it's automatic. There's no form you have to fill out, but once that amount is shown on your account, either 90% of the current liability, 100% of the previous, or $100 if the previous period does not exist. If that has been met by the original due date, then the extension is automatic. And these extension payments can be made on TINTAP. Excuse me. All right, estimated payments. So you're going to be required to make one of those estimated payments if there is a combined F&E liability of $5,000 or more after credits for both the prior and the current tax year. And again, here is just a little chart of when those payments are going to be due. It's going to be based on what your fiscal year end. The first payment is going to be due the 15th day of the 4th month of the current taxable year. Second payment, the 15th day of the 6th month. Third payment, the 15th day of the 9th month. And the fourth payment due 15th day of the 1st month of the subsequent tax year. And one thing that's important to note here is that payments for these estimated payments must be made in immediately available funds. All right, the not fun stuff here, penalty and interest. I want to spend a good amount of time on the next couple slides about this because I think that this topic is a little bit confusing for franchise and excise tax. At least it used to confuse me and still does just a little bit sometimes. But so first thing we're going to talk about here is if you have filed a valid extension, so you've met all the criteria that we just talked about for an extension, and you file your return timely. Let's say you filed a valid extension and you file your return before the extension deadline of November 15th for fiscal year 12/31 business. The only interest is going to be due if there's a balance of tax due. No penalty if you have filed a valid extension, but you may owe interest if that extension payment that you made was deficient in some way. Let's say you ended up having more tax liability than you thought you were going to have. There is going to be an amount of interest due on the balance of tax due. But if the extension is valid and the proper amount has been paid in, no penalty, no interest. If you have an invalid extension, the improper amount was not paid in, or the return is not filed by the extended due date, then both penalty and interest are going to be due, and that's going to be based on going all the way back to that original due date. So for a 12/31 fiscal year in business, the penalty and interest will be calculated as of April 15th. The delinquency penalty is 5% per month up to a maximum of 25%. and there is a minimum penalty of $15 on any late filed return. Here's a link to the current interest rate info. Right now, the interest rate is 12.5. That rate does change annually, so depending on if you're watching this video next year or in 2025, that rate may be different. So here's a link to be able to keep up with the current rate. A little bit more on penalties. If there is a late or deficient estimated payment, so if an estimated payment is not quite enough, the penalty assessed is at 2% per month up to 24%, and interest is going to be calculated at the current interest rate. So penalty calculated just a little bit differently for those estimated payments that are late or deficient. If you are late with renewing your exemption, there is a $200 penalty. Don't be late with your exemption renewals. Again, just going back to that list real quick of renewal of exemptions that do require a renewal. Everything in this yellow box is going to require you to renew your exemption annually by the due date, the original due date. So for 12/31 fiscal year end entity, you're going to need to renew that exemption by April 15th. You can request a penalty waiver. Here's a link to an article about how to request a penalty waiver. It's a fairly easy process that you can do on TINTAP, but interest cannot be waived. Interest by law, there is no provision in the law to remove interest. All right, mentioned minimum filing. If you are an inactive entity or you have no income, no assets, you can easily file a minimum return. This is something you definitely want to make sure that you do. If your business is not active but you have not yet dissolved through the Secretary of State, it's really important that you do this because you do not want to rack up penalties and interest on just failure to do this. It's very simple. On our TINTAP page, you click on Returns, View Return Links, and then File Minimum F&E Tax. It'll ask you for just a little bit of information about your entity, a little bit of account information. You're going to need your account number. And from there on out, it's easy to file that minimum $100 return. Excuse me. All right, so now we're going to move into kind of the nuts and bolts of franchise and excise tax. Not too much, but just the overhead view of both taxes, the computation of franchise tax, which is Schedule A. F1 should be used to report net worth unless a taxpayer is a member of a consolidated group that has filed a consolidated net worth election registration form. You're going to add together the total assets less the total liability and multiply that net worth by the apportionment ratio as determined by schedules N, N1, O, P, R, or S. And then that would be 100% if not apportioned to other states. Schedule F2, the CNW, or Consolidated Net Worth election, allows the net worth tax base to be computed on a consolidated basis with greater than 50% owned affiliates. So this election is not an election to file a consolidated return, but only applies to the method that is used to arrive at that net worth franchise tax base. Like Cody was talking about earlier, that's real important because that's different and handled differently in different states. Again, it's not an election to file a consolidated return, just coming about that base in a different way. Going to multiply the net worth by the apportionment ratio that's computed on these schedules you see listed here. And the franchise tax rate is 25 cents per $100 of value. Again, like we mentioned, there is a minimum tax that's $100. So even with no net worth, unless your entity has technically and officially dissolved through the Secretary of State, you're going to owe a minimum of $100 every year. Again, we're not going to be talking about Schedule G today, but for tax years that are ending 12/31/23 and prior, we're going to refer you over to our F&E manual for information about the Schedule G. Okay. So final returns are filed as a result of a complete business sale or merger or consolidation or like event. Final returns are the final return box, I'm sorry, should be only checked on the true final return after all assets have been sold or distributed. A business that is ongoing should not check that final return box. Final returns should not show zeros for the net worth and property values on the Schedule F or G. In speaking with someone from our audit division recently, they really made note that that's a big red flag for them. You do not want to report zero on those Schedules F or G. Final return status means that a taxpayer is in the process of winding down business operations, which will result in or is intended to result in the taxpayer ceasing to exist or no longer being subject to the franchise excise tax. The disposition of a business can occur in either a single day or it may take more than one day to complete. So you see here a kind of a breakdown. The complete liquidation of a business in a single day should report pre-liquidation values in the franchise tax base. For example, a business is sold on December 30th to an investor and proceeds were distributed that same day. Schedules F and G on the final return should report the net worth and the book value of tangible property at their values on the day immediately before liquidation. Taxpayers should not report zero. Repeat that. Do not report zero, but should look to the GAAP balance sheet on December 29th for the net worth and book value amounts. Now let's consider, let's see, a business that decides to close but chooses to slowly wind down and sells assets over several months or years. Once steps have been taken to begin closing the business, it is in final return status in the department's franchise tax worksheet for accounts and final used to arrive at the Schedule F and G values. If it takes several years to dispose of all the assets, this worksheet should be used for each of those years, and that's a worksheet that's available in our forms section. I can show that to y'all when we go there in just a little while. I know for businesses that are currently operating, it's not fun to think about your business closing, but this is one of those where you've got to really understand the process of that final return, because if it's not done properly, it can result in a big mess and a penalty and interest for you as well. So that's why we wanted to spend just a minute talking about that. All right, moving on to the computation of the excise tax, which is Schedule B. The starting point for calculating excise tax is going to be on your federal form. You see here the corresponding line that you use as your starting point depending on what type of entity you are, corporation, S-Corp, partnership, single member LLC. You can see here where the starting point for excise tax is going to be. The tax rate is 6.5%, and there's no minimum tax for excise tax. We call that a $100 minimum F&E tax, but really that $100 minimum was a franchise tax minimum. There's no minimum tax for excise, but since they're lumped in together, some people think about it as just a minimum for both. But a current year loss is carried forward and never back, and there's no proration allowed for short periods for the excise tax. A little bit more about computation of excise tax. All schedules begin with the current net income or loss from the corresponding federal income tax return, as we just talked about. And this amount is before any loss, carryovers, and special deductions. That's where the other schedules come in, though. We've got, from the starting point, additions and deductions are reported on Schedule J. Total business loss per Schedule J, line 29, is not the current year net operating loss, or the NOL. That is going to be computed on Schedule K. Losses can be carried forward for 15 years on Schedule U. One thing that's important to note here, that net operating losses do not survive to a successor if a taxpayer ceases to exist from a liquidation, merger, so on and so forth. Apportionment is allowed if a taxpayer would be subject to tax outside of Tennessee based on the same criteria of doing business and substantial net presence in Tennessee. Schedule N is 3-factor. Schedule S is 1-factor. A law passed a couple years ago. It was part of the Tennessee Works Tax Act that actually changes Tennessee, phases us down to a single factor. Credits are in Schedule D, also with the Tennessee Works Tax Act. As of, I believe it was, I'm not going to say, but as of that new law, carry forward credits are good for 25 years now, not just 15. I believe that would be 12/31/23. But anyways, good standing and tax clearance. Good standing certificate is requested by a business to give third parties to show that your taxes are current. Tax clearance is something that is provided to the Secretary of State, or the SOS, by registered businesses that are wishing to dissolve or terminate. That is going to be a required document by the Secretary of State when you go to dissolve. In order to receive tax clearance, if all periods are filed and paid, that letter will be automatically issued to you to the address on our system. We do have a way for you to request tax clearance on TINTAP. I can show you that here in a little while. But if all periods are filed and paid, that's automatic. If it is not automatically issued, we're going to let you know in writing why you do not have tax clearance. There's something you need to resolve, either an outstanding debit, something that's delinquent somewhere along the way, or any additional information. Maybe you failed to file the schedule of liquidation. If there's anything missing, we will let you know. If you have filed for termination, don't ignore any letters that come from us, because they very well may be regarding something that is missing from you in order to terminate your franchise excise tax account.
Katie, can I mention
Yeah.
something real quick on that?
Absolutely.
So, for clearance, we do look at all taxes too. So, in other words, if you are a filer of sales tax or business tax or some of our other taxes too, you're not going to get a clearance letter unless we get all of your taxes caught up and paid. Okay. So it's super important, and we get loads and loads of questions and requests for tax clearance letters every day, pretty much. But getting out of business is just as important as getting into business. And you've got to get out the right way. You mentioned earlier about the checking off on the final box, for on the return to say that your return is final. Super important. We get a lot of questions every day. Why am I still getting billed for this? I shut my company down 3 years ago. You never told us. I know that sounds sort of flippant and that, but I mean, honestly, we don't know stuff until you tell us stuff. So it's very important to really do it the right way. But also, as we'll point out here in just a little bit, and Cody will jump in here too as well. We're here to help you. We understand this stuff is hard, and it can get mixed up. But guess what? We can help you get through it and figure out exactly what you need to do. So that's fine. All right.
Thank you,
Thanks, Katie.
Billy. I've gone ahead and opened up the chat. So Cody, Billy, actually y'all can come back on here and we can talk about any questions that are coming through. While I'm doing that, while y'all are looking at those questions, I want to take everyone over really quick over to the website. So this is tn.gov/revenue, just to show you a few places that I've mentioned. The tax resource, under taxes, if you click on franchise and excise tax, this is where you're going to see a lot of information, kind of summarized everything. Not a whole lot of detail on the franchise excise page, but just some summary information. But for sure, The forms here. This is a great place to go for all the forms. It's a long page of forms here. Another place I want to take you is over to our webinar video library. So from the homepage, tn.gov/revenue, taxpayer education and outreach, tax webinars. At the bottom here, this is where you'll be able to view a recording of today's webinar, but all of our webinars are here. If you want to just click the top of the category and tax type, let's do show 100 here. You can see, look at how many franchise and excise webinars that we've got. We're going to be actually redoing some of these. So a lot of these exemptions, you can get more information by watching these webinars. One other place I want to show you just real quick, back to tn.gov/revenue. Over on TinTap, oops. This is where you can file the minimum return. You click on returns and then file minimum F&E. And one other place I want to show you is under exemption and registration. This is where you can apply or renew your F&E tax exemptions there. And this is how you can request tax clearance as well. All right, so go back over to here, and what are we seeing in the chat, guys?
A lot.
Okay.
Just as predicted, but that's okay. So I'll hit a couple here real quick, and Cody, you can jump in here too. Just sort of as they came, and we won't get to all these guys, and I'm so sorry. It's just not possible. Beverly asked an interesting question. If a local financial institution is not paying the excise tax or is delinquent, what type of recourse does the county have? Well, essentially, the answer on that is we certainly would want to investigate that. And I'm not sure how you would know that that's the situation, Beverly, but you may have information or whatever. But if we have a taxpayer that's not compliant, we will obviously collect through our collections division and do audits and things of that nature. So any taxpayer knowing that there's another entity out there that's not paying their taxes properly should report that to our tax fraud hotline. Okay, and we have a phone number and some information online to do that. So we would want to get that information so that we could actively check that out. Couple of other things here too. Here's one, Cody. What is the link for filing as inactive?
What
What do
is
you
the
think about
link?
that?
Is that the minimum they're wanting about for the minimum return?
Yeah, so that's the reason I bring this one up, and Tina, I think you mentioned that too. But it's interesting that you use this terminology because we hear this all the time. So let me get Cody's perspective on that.
Yeah. If you're inactive, that would essentially mean maybe you just have the filing requirement because you're registered or chartered with the Secretary of State's office. So maybe you formed the entity, but really not conducting any business. So there's no assets there, there's no net worth, there's no income or anything to report. That would be when you can file the minimum franchise and excise return through TINTAP there. That's the abbreviated version of the return where you don't have to go through all the schedules. You're kind of just, that return is just saying up front, I don't have anything to report. So yeah, that's if absolutely nothing is going on, in the business.
Right. And you can mark that as final too, correct? I mean, in other words, there'll be a time where you're totally out of business. Is that right? Or do you
Yes,
have
yeah,
to? I'm sorry.
yes, you do have the option to mark that minimum return as final as well.
Right.
Yeah, that is on step 3 of that page right there that said questions.
Oops, just went
The,
away.
well, no, that's fine. But yes, that does give you the option to submit the
Yeah.
final return.
And I'm glad that Tina brought that up in chat because that's a very common question that we get because people think, well, I'm just not active, I haven't done anything with it, so I don't owe any tax. That is not correct. That is not correct at all. So that water faucet is on, so to speak, until it's off. And believe me, there's a sort of a shock to that when you get some bills from us for assessments that are hundreds of dollars and all this other stuff that you don't really owe, but we've got to get you to file and pay what you do owe so that we can make that sort of go away. So, Cody, do you see anything else you want to talk about in here?
Yeah, I saw a good one that I think might apply to a lot of people.
Okay.
It says, are estimated payments / extension payments required if the carryover, or I'm sorry, carry forward is sufficient in covering current year tax liability. So that's if, say, for 2022, you have a big overpayment. Yes, that if you don't claim a refund on that, that overpayment will roll forward and be credited to the 2023 period. And then, yeah, so if that credit's there and it's large enough to cover, you know, your required estimated payments and extension payments, then great. You don't have to make any additional payments. So yeah, the carry forward credit can be used that way to cover your estimates throughout the year and your extension.
That is a
Yeah,
good
that is a great
question.
question. That's a fantastic answer too. Thank you for that. Let me see here. Hang on a second. So, I think we may have mentioned, and Katie may have brought it up too. There are changes in legislation pretty much every year, in this, and you do want to check our website for any updates and things of that nature as time goes on. We do post those out there. We make changes to that manual that Katie referenced and all the other forms and stuff like that too. And Cody, let me ask you this. I don't know if you've heard this or not, but it may be a little early, but it seems to me that the 2024 and beyond franchise and excise tax return will probably have to be adjusted in some way because of the Schedule G change. Have you heard anything about that at this point?
Yeah, I think I read on the FAQs that for 24, though I think the way it is now is that they were saying taxpayers will still see like the Schedule G on the return, but they're not required to complete it. But
Okay.
then for years beyond that, you won't find Schedule G on the return.
Okay.
But
Okay.
that could change, I suppose. But that's yes, what we kind of saw initially.
Right. And what we'll be doing too, since we're approaching November here and going into the next tax year, any updates to forms will be posted on the website with new revisions. Also, we work very closely with software developers that offer professional tax preparers, CPAs, the like, software packages. So they're very aware of what's going on with this, and we'll make it as easy as we can for people to understand what they need to do. That's for sure too. Um, the exemptions and being on time, that was a big important thing that Katie mentioned too. It is really important that folks renew their exemption so they can avoid that $200 penalty, which I'll agree with that.
I was going to show everyone, y'all, where legislative updates are, because we got a question
Okay.
on a registration form about how do the new laws affect F&E, and we were just talking about this before the webinar started about how every year there are changes to F&E. I don't think ever since I can remember, there's always some kind of change to F&E. So I was going to show you guys under tax resources, and then click on tax guidance. Of course, current changes, you can always find them in our manual, but if you want to look and see year by year what the changes are, you can click on legislative summaries, and then you can see here each year our legislative summaries are listed here by tax type. A big change in 2023 was the Tennessee Works Tax Act. I've brought that up a couple times today. That brought a lot of changes to F&E. Some of them went into effect for the current tax year. Some went into effect last tax year. We did do a webinar this past spring about the F&E changes that went into effect for the tax year ending in 12/31/23 as a result of Tennessee Works Tax Act, but there were several things here that you see here on your screen now. There were F&E changes from the Tennessee Works Tax Act that go into effect for this current 12/31/24 tax year. So there's actually a website, you can link to it here, a whole website dedicated to the Tennessee Works Tax Act, because that was such a massive change. And at the bottom and here, all the important notices. So you see here, there's 6 important notices dedicated directly to F&E changes that came as a result of that Tennessee Works Tax Act.
Mm-hmm. I got a question for Cody too, and it was something someone had brought up here too. We mentioned about nexus and about presence, right? So if you've got customers in Tennessee, but you really don't have like employees here, you don't have any assets here, things like that. Just the fact that you have customers in our state, does that give rise to the systematic and continuous presence part just by itself, or what are your thoughts on that?
Yeah, that's a great question. Yeah, so you can be under those bright line presence thresholds. So in this case, maybe you're under the $500,000 in sales. But yeah, if you do have customers in Tennessee, and if but part of that Nexus standard just says if your activity is systematic and continuous. And so yeah, if you regularly, will have sales and customers in Tennessee, that is probably giving you Nexus. I don't know. There's not a systematic and continuous. I haven't found like a specific court case or anything where that was really well defined.
Right.
But so if it's there might be a little gray area there, but yeah, if it's just kind of maybe a one-time sale in Tennessee, well, that's not really, of course, that wouldn't be systematic and continuous. But if it's occurring more than once, and maybe you have a repeat customer, then you're kind of getting into the area of, well, that is systematic and continuous.
And then if you do have that nexus, I think it's important to remember that we're taxing your Tennessee activities versus like your entire corporate
Yes.
activities across the whole like United States or world or
Right.
whatever.
Well, that is very true. Yeah. Then the apportionment schedules and the apportionment ratio, that's going to be your
Yeah.
your best
It may
friend there.
be incredibly small as far as your tax obligation, but still you might have a tax obligation.
Right.
Just
Right.
sort of depends, doesn't it?
Yes.
Yeah. That's a good thing. Trying to see anything else that we should jump into here. And Katie's going to mention, like I said, we won't be able to get to all of your questions here because of the limited time and the number of people that we've got here, but we're going to be able to tell you here in just a moment about how to get your question answered. So stay tuned on that.
I saw another question that I thought might be helpful again
Okay.
regarding estimated payments. It was about a first year service business. I don't know if I am seeing that now, but the question was, I've basically started business in 2024. When is my first payment due? And so, yeah, with the estimated payments, you're really not required to make the estimated payments in the first year, because you do have to cross a $5,000 tax threshold first. So in the very first year, you don't have to make any estimated payments throughout the year because there's no prior year tax. So in this case of starting in 2024, really your first payment's just going to be on the due date. If you have a calendar year end, April 15th, you're going to be filing the return and making your payment, or making, an extension payment. And then, so let's say your tax is over $5,000 in 2024, then go ahead and start making your estimated payments for 2025. So hopefully that clears it up and gives you a little relief in the very first year. You don't have to really worry about making your quarterly estimated payments.
Something really basic too that one of the comments in chat got me thinking about too that we get questions on all the time is, excuse me, about the what we're talking about, franchise and excise taxes here and the $100, and everybody's got to pay it no matter what, even if you did nothing and all that, right? So we had a change last year in business tax, which is the gross receipts business tax law, which eliminated the tax requirement for businesses that were under $100,000. We get a lot of people that get that confused. They think that change in business tax law is a change in franchise and excise tax law. It is not. They are apples and oranges. Okay. So just keep that in mind when you're looking at your state obligations on taxes, that there are many kinds of tax. There's almost 30 different kinds of state taxes, y'all. And each of them has their own set of filing regulations, requirements, etc. So just keep that in mind, that one could get confused with the other. And if you need us to help you clear that up, just reach out to us, which of course is what Katie's going to talk about here in just a second as well.
Are there any other questions y'all see in the chat that would be overarching that would be good to get to? We got about another minute here. I
Hey,
think
I want to preach for a second. Here you go. Here's my speech. Please don't give the government extra money. Okay. This is, yeah, this is the government telling you, don't pay us penalty and interest. Why? Because we want to educate you. We want you to do it the right way, and we don't want you to pay us anything extra. Now, we have to charge you extra if you have a problem. Okay. And it's not that we sit out here saying, oh my goodness, we get to charge these people penalties and interest. We don't want to. We want you to do it right. Okay. So please help us help you, right? Reach out to us in the way that we're doing here today with the education part of what we're doing, but these phone numbers that we're getting ready to tell you about, and our email support and all that kind of stuff. We're super glad to help everybody out, and we want you to only pay what you owe. That's it.
Amen. Preach on, Billy.
That's it. That's my little speech.
Well, as we wrap things up here, just want to thank you all for being here. Thank you, Cody, for being with us today and for your help in putting this together. If we didn't get to your question and it's something you can't find the answer to on our website or any of the resources, as always, feel free to give us a call. The general tax line is 615-253-0600. The franchise and excise tax practitioner line is 615-253-0700. You can always email us at revenue.support@tn.gov. And you see here the various ways to follow us and stay in the loop with the Tennessee Department of Revenue.
We do something really weird too with our phone service. We will answer the phone.
Except for on April
Imagine that.
15th, that might take
A
a while.
government, now, yeah, April 15th, guess what? You might wait a while. But besides that, we're very proud of our folks, Cody and the rest of these folks that do such a great job in franchise and excise and our other tax units as well. We're so customer service oriented, it would probably blow your mind. So our goal is to get back with you within 2 hours, knock on wood, with answers to emails that you send us, and we do pick up on the phone when you call. We pride ourselves in that. So please reach out to us.
On behalf of Cody's group, I'll say this too. Don't wait. And those of you that filed an extension, don't wait for your questions till November 15th, right? Ask them now.
Right.
Right.
Makes it rough.
Just to let you all know about some upcoming things, we've got our November webinar is for marketplace sellers and marketplace facilitators on the last Tuesday of the month in November. We are changing things up in December. It's not going to be on the last Tuesday of the month due to the Christmas holiday, but it's going to be on December 17th. We're going to be discussing Tennessee consumer use tax. We also have another quarterly new business workshop coming up on January 8th. If you're a new business, join us for that. And for those of you that are tax professionals in here and need CPE credit, you will have an opportunity as you leave the webinar to answer yes to that survey question. If you are requesting CPE credit, please just, if you could, answer the question that says enter your name as you would like it spelled on your CPE certificate. For the rest of you, we also invite you to complete our survey. Let us know if you have any ideas for future webinars or any feedback for us. Be much appreciated. So thanks to you all.
Thanks, everybody. Hope everybody has a good day.
See ya.